Hello on this Monday. Now, in this video, I will be more philosophical and let's talk about more, I would say, abstract things about right and wrong, what's possible and what is not possible. And I will talk it into context of FTX because, well, I believe that is one of the most spectacular failures, bankruptcies and frauds in modern finance. I wouldn't say this is the most spectacular failure, but certainly at the level of every higher failure what we have heard, whether it's Barings Bank in early 90s, whether it's long-term capital management in late 90s, whether it's Enron scandal, whether it's Lehman Brothers with its subsequent crisis of 2008, and now it's FTX. Well, I don't know what topic even to start, because the debt is so large and the absurdity of the situation is so huge that it's even impossible to comprehend what actually. But here's the context. FTX was one of the crypto premier brokers, and according to various sources and various information, it was second or third largest exchange, and we all know that. And we all know that its founder was rather an eccentric person who portrayed his image as someone who is not interested in money, not interested in financial rewards, but he mostly spends his money for common good and for good of crypto industry and crypto community and whatnot. And he has that image with curly hair, unbelievably bad physical shape, and the fact that he lives in Bahamas with his friends. And this is quite stark contrast with financiers of the 80s and 90s who had like hundreds of tailor-made suits, private jets, limousines, and everything else what you might imagine from that lifestyle, on the surface at least. And he had a very good way how to show his image and how to sell his image to others. So it kind of worked, because let's be honest, I was not that interested in him. I just knew that he was one of the richest people in the crypto industry because of his exchange, and that he looked not like average billionaire would look, and he was very young, and actually his rise to the top was extremely fast. And that made kind of curiosity from me, because I thought, dude, like, opened his exchange in like 2017 or 18. No, he had his trading firm before, I think in late 2010s, and then he opened his exchange, but of that later. Still, he managed to get that success in kind of 5 years span, and he was, as I told you, in cover of every magazine and considered as premier entrepreneur in his industry, and nothing could go wrong, and everything was simply success. But here's the thing, what bothered me at that time was the fact that I really didn't understand how did they make money. Like, I understand how make money investment banks, commercial banks, hedge funds, pension funds, even forex brokers. All of them have relatively understandable business models in the way, and you could comprehend how do they make money. One makes money out of fees, one makes money out of market making, other makes money out of credits or whatever, but I never actually realized, and in the most extent I still cannot realize, how the crypto exchanges make money. Yes, I understand that exchanges make money via spreads, like difference between bid-ask spread, that's common knowledge, but I really didn't understand how could they be able to finance their operations, make huge investments in marketing and their brand name, and still be profitable, or could have some long-term business model. Now, maybe their angle might be to get as much customers as they can via VC funds, then promote themselves, at the same time, and then monetize on those customers. This is like new startup model, and probably it was possible due to the fact that crypto rose quite extensively and capital was cheap. I thought maybe that was the idea, but it still didn't answer to many of my questions. How you could get that large that fast, and the FTX, I think, was one of the most visible examples in that space, because it rose extremely fast. It got huge money. It was on every name and every cover you could imagine. Its founder was interviewed by all of the top financial media outlets. Everything was all right. But yet, like out of nowhere to those who are not that deep into financial industry and in crypto regulation and in crypto exchanges in particular, you see at one Sunday evening, basically founder of Binance just dumps FTX tokens, and then surprise, surprise, it turns out that FTX is underwater. They don't have any capital, and a few days after that they're forced to liquidate themselves. And then things are being relieved to the extent that I don't know, it doesn't seem real how absurd it was. Here's the fact. This guy was not wizard, he was simply ignorant fool. He was not a fraud, I think, in the common sense, because he was too stupid to be very successful con artist. He was just dumb. You know why I'm saying that? Because when we are seeing more and more information about that, we see that they even didn't have any corporate controls. They didn't have proper corporate structure. They didn't actually knew what their employees were doing, and they were accepting their salaries via, I think, WhatsApp or whatever that was, somewhere like common chat group or something like that, with emojis, that they made their jobs and they simply give emojis whether the job is complete and they could be rewarded. This is simply as sophisticated as if someone mows lawn or, I don't know, clean street, he gets paid for that, you know. But this was even more absurd because they didn't actually know what they were doing. For lawn mowers, people know what they are doing. Here not. And what's the most interesting thing? They even didn't have any notion whatsoever about their bank accounts and what their financial situation are. So basically these guys were having complete chaos, complete absurdity in the fact that they were just a bunch of kids who were spending money lavishly, thinking that they are very smart and didn't actually know how to operate proper business. And this is stark contrast from Enron, from Lehman Brothers, from long-term capital management, where people actually employed quite smart people who had quite smart ideas, and they had resources and everything to pull up rather good investing strategies and investing plans. But this was not the case. The most absurd case here was that they were so primitive and so dumb that it was impossible for them to actually make any kind of serious decisions, you know. And that strikes me. How do they got that money? How do they were funded by top tier VC funds like Sequoia Capital? Those people should have done some due diligence, right? But it seems no. But I believe that they basically gave money simply by making lottery. How large VC funds look at them. Maybe this guy was related to some financier, or they had some relatives out there, and those relatives said, this is a good guy, let's give him some money. So they received some money, made some initial pool with that money, and then other VC funds just joined the wagon, and they gave them more money because they perceived that if crypto would rise in price, the value of exchange will rise, thus their capital be more valuable, and they'll be able to sell to another VC fund. So this is something which in financial markets is called greater fool theory. That means that it doesn't matter how absurd those prices are. What matters is that there are another fool who is willing to buy such an asset for higher prices. And this is what VC funds actually done. I think they were aware that these guys are not that smart, but they are hyped. So they have a ability to refinance the deal, reevaluate those companies and sell them into higher prices. And they were rather successful for that for periods of time. And you know, that's the absurdity of situation, that someone who has connections to capital gets initial funding, he gets lucky, he gets initial start. Then other funds basically invest to them only because they perceive that industry is hot and they might be able to sell those assets for higher prices. And then on it spins, and those people who have that capital believe they are smart, but they are idiots. And eventually this collapses. So this is one short story of how bubbles are formed and how absurd situations are happening and evolving. You know, this might be some sort of I don't know, self-reinforcing bubble when people perceive that they are smart and they are actually believing themselves, and others believe that they are smart because they have fooled themselves, their initial investors, and others. If others say yes, this VC fund has invested them, this journalist has interviewed them, so we perceive that he's smart, right? That we could do the same, and then on and on and on it spins. And eventually, if the fabric is very weak, like crypto industry is very weak because it's made up out of thin air, out of tokens, who has no value in 99.99% of the cases. And when that collapses, everything beneath them collapses, and there will be very, very visible examples of that situation. And this was one of these situations, I think. So I hope my sort of philosophical treat to this example was a bit different from others who were trying to show as many facts from bankruptcy proceedings for lawyer reviews about this industry, or some sort of public comments and exchanges of tokens and whatnot, because that's the thing, that's the principle of human nature, that we believe to other people because some other people has believed in them, and then we could make bubble out of thin air. And that's the principle how bubbles are formed, whether this is today, 10 years ago, or 100 years ago. Principle is the same. We perceive something is important and we place value on it. And that's the fundament. You could make as sophisticated technologies as you like, as sophisticated legal proceedings, corporate structures or whatever. They will be broken if the mania is very large, as it was with long-term capital management or Lehman Brothers. And if the people will have tendency to do bad things, they will violate every corporate and accounting law, as it was in Enron. Or if mania is particularly hard, even complete fools and lunatics will be able to get to huge assets and try to think that they know what they are doing, and then they are next generation of hedge fund wizards. But actually, they were so stupid they didn't understand what they was doing. I honestly believe this is the example not of shrewd cunningness, but complete stupidity, because I think honestly they didn't understand what they were doing. I think those conflicts of interest between customer funds, FTX and related entities who traded those funds actually were made because they were stupid to understand the consequences of that, and they didn't have people who could be able to objectively tell them the risks of their situation. And that's the essence. I think the one one guy who is quite smart told that all great scams are not made out of intellect but out of stupidity, because in many cases most people don't believe that something as stupid and simple is possible, but there are people who are so stupid to don't understand the absurdity, and sometimes might pull off something spectacular, and this is the case. Oh, of course, this situation is only evolving, and it will be at least months till we'll get to true extent of these situations, so probably there will be more video ahead, but here's my philosophical treat about it, and I will make similar types of videos later, so stay tuned, make sure you're following me, and bye.